Indian markets are outperforming this year, but last week was a stellar week for the Indian market, where Nifty and Sensex hit their fresh all-time highs of 17,793 and 59,737 respectively, whereas Bank Nifty has completed its unfinished business to test its new all-time high. Relief package for the telecom sector, the announcement of a bad bank, strong FIs inflow, and massive short covering were key factor for the Indian markets to outperform. Next week is going to be critical for the Indian market after a recent outperformance because there is some weakness in global markets where the outcome of FOMC meetings, which is scheduled on 21st and 22nd September, will be a critical factor. There is a possibility that US Fed may talk about the timeline of bond tapering, which could be as earlier as November, and that may lead to a cautious move in the global equity markets. Some signs of slowdown in China are also a cause of worry, especially for the metal sector, and most of the metal stocks have started to show weakness from last week. Other than US, the Bank of Japan will also come out with its monetary policy on 22nd September. Rising COVID-19 cases in the USA and other countries may also disturb the mood of the market. The movement of dollar index and US bond yields will play a critical role in the behavior of the emerging markets like India. The dollar index is trading near critical resistance of 93.5, and if it manages to cross this level, then we can expect a sharp surge. Moreover, US 10-year bond yields are also giving signs of bottoming out. It will be important to see FIS behavior if there will be a rise in the dollar index and US bond yields. We have seen that strong FIs buying in last few days, and that is leading to strong bullish momentum in large cap stocks. We are in a roaring bull market, and I believe it may continue for next 2 to 3 years. But after a long time, I am sounding a little cautious as there are some signs which indicate that a short-term correction is around the corner. The Nifty Midcap Index is witnessing a reversal from upsloping channel trendline resistance around 30,500. And Nifty also witnessed some selling pressure near the 17,800 to 17,850 resistance zone. The sharp rally on Thursday and the first of the half of the Fridays has taken out lots of weak short in the system, whereas weak longs may get trapped at higher levels. On the downside, 17,430 to 17,250 is a critical support zone. Below this, we can expect a correction in the market, and that could be extended towards 16,700 level. While if Nifty managed to take out the 17,800 to 17,850 zone, then we can expect it to hit 18,000 mark. If we talk about derivative data, then put call ratio is at 1.15 level, and FI's long exposure in the index future stands at 68%, which is still indicating comfort in the market. But India VIX is showing an upside momentum that could lead to volatility in near term. So it is all about the markets. Now come to our recommendation for the next week. Our top pick for the next week is by Majgaon Dog, which is trading around 255. Best stop loss would be 247 and the target would be 272. So this is all about next week. This is Santosh Meena, Senior Research Analyst at Swastika Investmart Limited, signing off. Thank you.